Hello, guys. Welcome to another session. So, in this session, we are going to discuss the potential impact of the US election on the stock market. This topic is very crucial as it is actually helping us to understand how political events can influence the market behavior and provide insights that can be valuable for both investors and financial advisors. So, guys, let's get started by understanding some basic facts about US election. So let me share the screen and then I'll explain with the help of the PPT, the facts and everything. Okay. So let's move on to the election basics. Right. Okay. So to set the stage, it's very important to know how U.S. election worked. A few fundamental details about U.S. election system. So U.S. election involved 538 electoral votes. Okay, with a majority. 538 means majority is 270 required for a candidate to win. So in the upcoming election, in this election, the key figures, Donald Trump representing the Republican Party and Kamala Harris from the Democratic Party. So these are the two main parties and two main candidates. So the outcome of this election could significantly influence the market trends depending on how clear the results are. Okay, a decisive win might result in immediate market reactions, whereas a close and contested result could prolong uncertainty and impact the market negatively. So when I say decisive win means it could be next day you will get the result. But if it is like very close, then there will be court cases and then the judgments and everything, and it may take some time, and that uncertainty will be there. So that can, create or affect the market negatively. Now coming to market reaction to uncertainty. Okay, so guys, see the one of the key takeaway is that the market typically dislike uncertainty. So we have discussed this many times because I have some issue here. That's the reason why I'm not able to talk like the way I normally talk. Okay, so please adjust to that. So if the election results are close and legal challenges arise, suppose the parties are going to the court, and that lead to delays maybe till Jan, and we could expect the stock market to remain sluggish or even face some good correction also. But if a clear result emerges soon, okay, the market sentiment might stabilize more quickly, regardless of who win, because things are stable. At least that is important, right? So policy implementation would likely to begin around February, and which could set the tone for future market behavior. Now let's focus on policies of Trump and their potential impact. Okay, so let's first look at policies proposed by Trump. So he's known for favor tax cuts and pro-business stance. So proposing a reduction of corporate tax, from 21% to 15%. So such kind of tax cuts could potentially boost corporate earnings by approximately 4%. Now Trump's focus on promoting Make in America would mean increased tariffs, particularly targeting China. While if you see this might stimulate local production, it could also lead to higher import cost. So that can increase the raw material expenses for US based companies and potentially affecting their profitability. Now coming to implications for the Chinese market and global reaction. See, the Trump policies, especially those aimed at imposing higher tariffs on China, could lead to significant reactions. China, in response, might introduce stimulus measures or depreciate its currency to keep its exports competitive. So this could result in a decline in the Chinese stock market, which may prompt foreign institutional investors to shift their investment from China to other countries, which can include India. So there can be a huge forex which is going to come to India if that's the situation. So this shift could be advantageous for emerging markets, especially India, and depending on how global investment landscapes evolves. Now coming to the policies of Kamala Harris and their impact. Right. See, if you look at Kamala Harris policies, it's different. She plans to raise corporate tax from 21 to 28%, which could potentially lower corporate earnings by up to 5%. So Harris focuses on empowering consumers by enhancing their capacity to spend. So the idea is that increased consumer spending would boost production and corporate growth automatically, indirectly. So this approach supports the broader economy through consumption-based pattern. It contrasts with Trump's direct support for business and tax reductions. Now let's move on to the sectoral analysis part. Let's also discuss how election outcome could influence specific market sectors. So one of the major sector affected is actually consumption. So when the interest rates are lower, consumption typically rises. So if Trump win and the Fed might, tighten the interest rate. So for example, Trump is winning on one side and the Federal Reserve maintain the tight interest rate, and rate cuts may not happen as quickly, so which could slow down consumption growth in US and also India. So see, the interest rate cut which was done before, and we were also expecting some more cuts. If that happens, it is going to be well and good. That will increase the demand and consumption. But if that is not happening, then the consumption will come down. Not only in US, in India also, the interest rates and everything is actually interconnected. So this could, even after they reduce the interest rate, RBI governor remained, the same. We did not reduced. Okay, it was like premature to reduce the interest rate as per his commentary. Now, this could affect sectors like NBFCs and also the banks. Because if interest rate is again higher, it can affect the banks because the cost of borrowing will be high. So people won't borrow. So that will affect the profitability of bank. But public sector banks might still perform better due to their current valuations. Okay. So the second sector is again when it comes to its renewables. Both Trump and Harris have shown interest in renewable energy. But if you see Trump's tariffs on Chinese imports could boost India's solar module export to US. That's something which we can take into consideration. And the third sector will be like a capital market. So positive election outcome can lead to more market activity, benefiting trading volumes and participants in the financial market. Now let's also look at historical market performance post-election. So, guys, analyzing historical data help us in understanding the potential trends, but that's not a guarantee. On the day of previous elections, markets have shown mixed reactions, but looking at the performance 3 to 6 months later, the trend is usually positive. So, for example, data show that on an average, market posts 7% to 12% gain within 6 months after US election. So, barring exceptional cases, that was in 2008 during Lehman Brothers crisis. Otherwise, 7 to 12% up move was there. So this basically indicate that while there may be short term volatility, the market tend to stabilize and perform well over a period of time, not much time, within 6 months itself. So now we can conclude this discussion. Okay, so guys, in conclusion, what we can say is there can be immediate reaction based on who win the US election, but historical data suggests that market generally recover and perform positively within few months, within 6 months itself. Okay, so both Trump and Harris have different approaches, their perspectives and their policies are different. Trump focus on pro-business policies and tax cuts, and Harris, on the other hand, emphasizing consumer empowerment and higher corporate tax. Okay, so understanding these policy differences and their potential impact on sectors like consumption, renewables, and capital market can actually help the investors make more informed decisions. So thank you guys. Thank you for watching the video. See you in the next session. So that's it.